Hello there and welcome to Equity Story. My name is David Malinowski. Today we are going to talk about venture capital and VC investments, but from a slightly different angle when it comes to the capital bit of it. So there's a lot about how people subscribe for shares, how people seek equity investors. But what about debt? So today my guest is Michał Papuga, investment associate at Flashpoint VC. Welcome.
Oh, pleasure to meet you. Welcome.
So I suppose for those of our viewers who do not perhaps know or came across Flashpoint Venture Capital, perhaps you could tell a bit more about yourself, your career to date, and also what you guys do, particularly in the CEE region in Poland, but in particular.
Sure. So quickly about myself. So my name is Michał Papuga, and I work as investment associate at Flashpoint Venture Capital. I focus mostly on venture debt, but I guess we will come to that a little bit later. And Flashpoint VC is a venture capital group which was launched in 2012. Initially just by our two founders, Alexander Konoplasty and Michael Shalantai, Alexander from Ukraine and Michael from Hungary. And initially it was just as standard venture capital early stage fund focused on late seed Series A companies with a link to Central Eastern Europe, but expanding globally. So basically the group was about the thesis that people in CEE are great, that quality of talent is astonishing here, but it's not so easy to expand into Western Europe, into the US market, etc. So the idea of the company was to support the greatest entrepreneurs out of our region and support them in expanding into new markets. And since 2012, we have fully invested two of our equity funds. And a couple of years ago, we noticed basically that we have a lot network and connections in Central Eastern Europe, but we are not always lucky enough to invest in all of those great companies at late seed stage when they are just starting. But we still know them, we meet with them, etc. So we wanted to introduce new products to our offering to be able to support those companies at later stages as well. And this is how we have launched our venture debt fund in 2019, and also our secondary fund in 2020, late 2020. And basically both of these funds are focused on later stage of investments. I would say post Series A for venture debt fund, and post Series C even for secondary fund. And this is what the Flashpoint is right now. So it's a capital group with over 400 million of assets under management, several products focused on CEE and early stage companies, but with slightly different angle. And I believe that we are really one of the few companies in CEE with such a wide offering of products. So that's briefly about Flashpoint VC. And myself, I joined the company in 2019 as one of the first members of the VD team. And prior to this, basically I spent most of my career on private markets, first working in PineBridge Investments in a private equity fund focused on CEE as well. And then I was working for a VC arm of Polish entity of Commerzbank. So it was
mBank.
Yes, this is mBank. So I was focused mostly on fintech companies at very early stage.
So in terms of venture capital, more broadly speaking, so in your from your outlook and your experience, so where does the money come from in terms of the people and institutions? Who are these actors who invest in Central and Eastern Europe in these venture capital startup companies?
Sure. So I would say I would split the answer into two categories. So there are LPs and GPs. LPs are mostly funding GPs or directly the companies. So I would say when it comes to LPs, it's been a long journey for the local ecosystem, meaning Poland and Central Eastern Europe in general, because VC market was basically non-existing 30 years ago for sure in this territory. But I would say that even like 15, 20 years ago for Poland was like the very beginning of VC as we know it right now.
Well,
And at the very beginning, I would say that when it comes to people and like where does the money come from, I would say it was coming mostly from high net worth individuals. So of course there were some institutions that were investing even so I started in the 1990s. But at the very early stage, like the seed companies, when it comes to the companies with just the idea of like some MVP only, it was business angels who put a foundation to the ecosystem in Central Eastern Europe. And those business angels I would split like into two categories. And the first one like is a very standard one. So I would say these are ex-entrepreneurs or like current entrepreneurs who want to diversify their portfolio a little bit. And they are investing the money that they earned through VC ecosystem in the early stage startups. But I would say like that the truth is that we, especially in Poland and all the former Soviet Union countries, we didn't have a lot of time to gather the wealth. Basically, we started doing it 30 years ago. So even 20 years ago, it wasn't like an enormous amount of entrepreneurs who already made it, who had enough capital to invest in VC markets. So I would say that the foundation, when it comes to business angels, on the Polish local ecosystem was put by like senior executives of companies, so like consultants, CEOs, management of companies, etc. So people who like earned relatively well, let's say, and they had enough capital to put it somewhere else. But
take
it
business
wasn't,
risk, etc. Yeah.
etc. But it wasn't like in many different countries when we basically had large cohorts of people who started their business, they sold it to like some US strategic partner, etc. So we didn't have a lot of such cases. Like basically, right now, speaking today, we have plenty of those companies like Allegro, InPost, Pracuj, like plenty of them. But 10 years ago, there were a handful, basically. So I would say that these like relatively small investors, like C-level executives, they have put a foundation to the ecosystem. And then the second part of maturing the market was when the government funds put more focus on the ecosystem. And over the last 5-10 years especially, we have seen a lot of government funds, both from European Union and like Polish local government. When we speak about Poland, like PFR, so like Polish Development Fund. So PFR is like one of the first, let's say, market standards fund of funds who invest in local VC ecosystems. Apart from them, like it was EBRD, EIF, mostly like European money. But the reason why they have started looking in this market is because the foundation was already put by business angels in like early 2000s and 2010s. And then clearly we were lacking the institutional money on the market. And it has changed mostly due to the government money. And then as the third part of the equation is the like large institutional private investors who have started to invest in the market. And like, of course, we had even like American investors like institutional American investors investing in Poland in 1990s, but also
VC related, was it?
So like there were like several, let's say, tryouts for the VC market. I think Enterprise Investors had one of the first VC funds in Poland, even in 1990s, like early 2000s. Also MCI was an example, but we can have like 2-3 examples, and that's it basically. But right now, in Poland, in CE, we have already several funds which have raised their third consecutive funds or even fourth one. They have a track record, they have success stories. And this is when like all the pension funds all over the world are starting to look at the ecosystem, because first they see that it's matured, it's big enough, and then they can see that there are well enough amount of fund managers who have the track record, who have the network, and who are able to invest this further. So it's also visible. So let's say I have cover the LP part, and now like moving swiftly to the GP part. So I already told you that like there are already a couple of funds that have raised like their third, fourth consecutive
with a
funds.
track record.
Yeah, and like their first funds, like Flashpoint is a good example. So our first fund, it was like our founders' money basically and some friends. It was, let's say, 20 million euro fund, $20 million. And right now, like the average ticket for the new fund, the average size of the new fund is like 70, 100 million, which is still relatively small, especially comparing to Western Europe, to the US. But still, it's like, it's 5 times more than it was like 10 years ago for Flashpoint, especially, for example. So Flashpoint first fund was 20 million. Right now, our third fund is like 105. So this is when the market went within 10 years, basically. And for me, it's especially interesting because I started my career in private equity, which was like, let's say, 5-7 years ago. But I have seen that there is a huge opportunity on the VC market. And taking Poland as an example, so like both in 2021 and 2022, amount of VC investment in Poland was like 800 million euro annually, which is still, I think, less than 1% of all the European funding. But through all the 2010s, like 2010 to 2018, 19, it was like 50, 100 million euro annually.
So the growth is
so
just
basically the growth is
yeah.
like 8 times more. And of course, like last 2 years were one of the best, like it was the peak of the cycle for the VC, for sure. We can say it already. But still this year, like we can see the slowdown of the growth. But still we are already sure that with that amount of like talent, capital, we are not going back to like 2015 when we had like Doc Planner doing their like one big round and then let's say 50 million euro for the whole country. So we are sure that we are not going there anymore. So the market has expanded significantly, and I mentioned like the GPs, local GPs that they were raising their like third, fourth consecutive funds, but also over the last couple of years we can see much more interest of international investors. So like big Western European funds and even the US ones who have seen like huge success stories coming from the region, like UiPath, I think would be the best example. And all these funds are also covering the region as well. So 10 years ago, of course, like CEE was an interesting region, but it wasn't proven. But fast forward 10 years, and we already have several companies who made it to NASDAQ with several billion IPO. And this is why, like right now, local funds are competing on par with like US ones. So if we have a nice company coming from Poland, you need to fight for it basically with like Andersen, Axel, etc., plus all the local players. So the interest is huge, and currently we are at the stage where it's not like strictly local market anymore. So it's not only about local funds, but the international, the biggest ones in the world are also looking at this market. And of course, like they are doing like 1-2 investment per year, but they are in all the major processes. So finally, I would say that the market is mature enough for it to have some space both for local investors and international ones. Also, the institutional money is coming in. Plus, we have more and more, let's say, entrepreneur cohorts from the companies that were building over the last 20 years. And there have been some exits, either for like sale or dividend or anything else. And there are people who have built their own startups and they know how to do it. They want to invest further in this system. So I would say like the growth has been spectacular. And despite all the recession, all the things that happened during this year on the markets and in the world, I can clearly say that like Poland and Central Eastern Europe is in the like one of the best moments in its history when it comes to VC market.
So you touched upon quite a few different aspects of the transformation of Poland, of this entire region, from a market which was pretty undeveloped when it comes to its sophistication, sources of funding, let's say, qualifications, when it comes to experience of human capital, etc., to this market that went through an exponential growth in all these avenues in a relatively short space of time. So I suppose you also summarized it quite neatly in saying that despite the fact that there were some hiccups, should we say, or perhaps, you know, that there was a bit of a slowdown recently when it comes to the VC market, in terms of the broader picture, the CEE market and Poland, if we want to be, you know, more specific to our local neighborhood, has a huge potential, and there is a lot that is going to happen in this region when it comes to, you know, us looking at the trajectory of growth to date. So lots of potential.
Yes, exactly. And also, so of course there's a slowdown all over the world right now. But I think what's interesting about CEE is basically the capital efficiency. So although it's much more difficult to sustain the high growth levels that the companies had over the last couple of years, although it's more difficult to raise huge equity rounds, still the companies deriving from CEE are in a slightly better position than their competitors from all over the world, like, and I mean mostly like Western Europe, US markets, basically because of capital efficiency. And of course it partially goes through the like cost of work arbitrage, let's say, and like the difference between salaries in CEE and other countries.
All that stuff, yeah.
But still, in general, I would say that CEE is very good at bootstrapping. So as I said, like amount of VC investments 5 years ago was like almost 10 times less than it is right now. But still, like the companies that are like the best examples right now, those are the companies that were launched like 10 years ago with like little to no capital involved. And we have it in our roots that we are able to bootstrap. And even though right now it's much more difficult to raise enough capital, those companies are like flexible enough and eligible to move again to kind of bootstrapping phase, to live on a shorter amount of money. And I think that that's also something that will make the region flourishing over the next couple of years. Because like we don't have a problem, for example, of companies that are burning like millions monthly. Of course, like there might be some examples, but even those companies are able to quickly move back and significantly cut their burn and still growing very efficiently in the meantime.
So essentially a huge potential for growth and also fairly good value for money as it stands.
Yep, that's our pitch for investing in the region.
Excellent. No, I mean, you would definitely, if I was an investor, you would definitely have caught my attention with even these two things. But moving to a bit more sort of specific to your practice area, kind of types of questions. Let's talk about debt in general in terms of venture capital investment. So I suppose, broadly speaking, who is it for? What are the potential advantages? Why would you, as for instance, being a founder of a startup, why would you want to look at debt as part of your capital structure?
Sure. So it's really nice that you like touch on founders, because I think it's the best to explain from the founder's perspective. If you are a founder of a startup, basically you need to choose between like raising as much equity as possible and investing it in your own idea with a hope that it will like turn out a profit in the future, or taking as less equity as possible and instead having a stake in your own company. So like there are a lot of examples when the companies made a huge success, but like the founder ended up having like 5% of the company, which is like still for some cases enormous amount of money. But of course it's better to have like 50% stake in your own business than 5%. So also it's kind of a story of like Steve Jobs, for example, who lost power over his company. And like then we had all this story with him returning to Apple, being fired, etc. So that's basically the effect of dilution that Steve took on himself. and like every founder has to face the same challenge. So then debt is like an effective solution against the dilution. So let's say that you need X amount of money to grow your business. You can take it either through equity or debt, or your own money, but let's say that it is equity as well. And now when it comes to debt, basically there are, let's say for our example, like two sources of debt. So the first one is banking financing, which we can call like the cheapest way of financing your company, because like it's almost, let's say that banks offer the lowest rates, subject to the personal risk, but it's very difficult to get anything like lower than base rate, which we have on the markets. On the other side of the equation is the equity. And let's say that over the last couple of years with zero interest rate environment, it wasn't so rare to raise debt at like 3%, 5%, 10%, depending on the personal like risk profile. On the other side, equity is representing the capital of funds who are seeking like preferentially 20% plus IRR, and with power law on the portfolio distribution, which means that like out of 10 investments, basically 5 might not perform that well, 3 will perform reasonably well, and like we will have outliers who will return like 5x, 10x, 100x of the fund, whatever. So basically, assuming that you as a founder are selling the stake of the company to VC, and you will be this successful company, the total like cost of capital, so like expected return that the VC wants to make on this company, it's not 20% actually, it's like 50%, 70%, because it has to like balance with all those companies which will return like 0 or negative or like 5%.
Yeah, so it's essentially eggs basket, you know, and sitting there, well, not sitting there, but essentially keeping your fingers crossed that one of these, for the sake of argument, 10 investments that you make within that one basket, i.e. that one fund, is going to turn out to be incredible and essentially is going to outperform to the extent that all the others not really performing that well is not going to be such a major issue.
Yeah, exactly. So you are selling stake of your company to a VC, and basically it costs you like 50-70% if you want to make a success in the future, because that's the appreciation of the stake that it should happen in the future. And on the other hand, instead of like taking 70% equity, you can take like 5% bank loan. However, when you are a startup, it's very difficult to get the financing from bank, because you have no history, you are not profitable, usually you have no assets.
High risk.
Exactly. So like there's plenty of reasons why banks do not want to finance startups. And then venture debt comes in between. So of course we are not as cheap as banks. On the other hand, we are much cheaper than equity still. And we are the effective solution to fight the dilution. So let's say that instead of raising like 20 million round as your Series A, Series B, you can raise like 15 million equity, dilute yourself only by 15 equity, and raise 5 million of debt. So the effective amount of cash you have for growth is the same, but your stake in the company is higher. And with all the rounds that startups usually do in their lifetime, like seed, Series A, B, C, and like it can be a very long list. With each percentage of dilution that you save on each round, it can amass to like enormous difference when it comes to exit. So that's the main idea behind venture debt, basically to support founders with some effective shield against the solution, plus giving them a tool to increase the growth of the company without raising additional equity.
So dilution being one of the potential problems with equity investment, and it's something that obviously, as you've mentioned, it's something that many founders have to face. You know, when they raise capital. Let's go a bit deeper into that. What about control in terms of decision making, interference? So obviously, to my mind at least, as a debt lender, effectively, you would not, you would still have some checks and balances, if you like, over decisions that the company takes or makes, but it will not be as heavy-handed as you would have with, as if you would have an institutional investor seeking a large stake as an investor, having all these reserved rights and everything that will enable that investor to interfere in the decision making. Okay. Is that fair enough to say that there's a less degree of control?
That's right. However, like I wouldn't put it like in opposition to equity. So like a very important thing is that venture debt is complementary to equity. So like growing a startup, it's still a kind of equity risk, which can be slightly offset by debt. But in the companies that we invest, there is always some equity support behind the company as well, with some additional rights that usually the equity investors have, even if they are minority. So I would say that if the founder wants to avoid like giving any special rights to his equity investors, and this is why he wants to take debt, that's not that's not a perfect solution, basically. You are able to like get rid of your equity investors if you will take, let's say, banking financing, but you need to be eligible for banking financing. And then banks also do have some powers with covenants and all the concepts that they have to do. So, but still, so it's more comparable to venture debt. So let's say venture debt compared to banking financing, the main difference is that there are no covenants, basically. So for venture debt, it's like use it as equity money. The company receives the full amount and they can use it for growth. They don't have to be worried about profitability.
So not as much KPI orientated.
Yes, etc. With banking financing, let's say you need usually to have some the net debt to EBITDA level assumed. This is not the case for venture debt. However, venture debt also has some like additional rights, let's say. But as we usually cooperate with equity investors, these are like below their rights, let's say.
So they're not as onerous in a sense, or how do you mean below?
So what I mean, so basically when it comes to venture debt additional rights that we have when we invest in company, these are like consents for paying out a dividend, issuing new debt. When it comes to issuing shares, if it's a capital increase, we do not have a right to block it.
I see.
So we do have some, like let's say, corporate governance additional rights. We usually ask for a board seat member, non-voting one, because we want to have the same level of information as equity investors. However, we are not voting, we are not making the decisions, apart from, let's say, potentially letting cash out of the company. So like either paying out dividends or selling part of the enterprise. This is something that we would need to have consent for. And these are basically our biggest rights that we have. Then it's of course also subject to default, because like if the company defaults, basically we are a senior secured lender, so it's a completely different story. But as long as the company is repaying its debt, we are still like equity investors are running the investment, or like I would say founders for startups, founders are running the investments with the support of equity investors who usually have some additional rights. But for venture debt, we are not interfering directly with like day-to-day operations of the company.
So it's more backseat, it's information rights orientated, and you would only get, let's say, involved in the very crucial decisions as to the company's general strategic direction. So as you said, dividends, selling a part of the business, or significant strategic assets, these sorts of things.
Yeah.
So as lenders would effectively.
Yeah. So like so we are sitting in a backseat, as you said. So it's a very good like description. So basically we usually we always try to invest along with great equity investors, and when we do the risk evaluation of the company, we look at two things. So first of all is the company itself, its unit economics, its history, its business plan, etc. But on the other hand, we always meet with their investors. We usually like we are on this market for several years already. We know most of them. We have relationship. We have some co-investments in the past. We know how they behave.
Yeah, the risk appetite, everything. Yeah,
exactly. So for us, it's not only about risk profile of the company itself, but
So
also let's call it
investors.
risk profile of the investors. And we want to invest in companies that are supported by equity investors who we like to work with, who we know that they are doing a perfect job. And so debt is still sitting in a backseat, but it's equity or founders, like both of them, who run the
Driving the whole
company and
thing.
drive it. Yeah.
Oh, excellent. And you mentioned the broader market there for a second. Could you tell us a bit about how the whole idea amongst the of venture debt among the founders? How did it kind of gain traction in the last few years? Because obviously it's relatively new-ish, and obviously the fund is also new. So what do you see in terms of the sort of trajectory of growth, in terms of interest and uptake, if you like, of venture debt among founders here in the region, in Poland, from your experience?
Sure. So our fund was launched in 2019, and we were the first, and like as far as I know, basically there are two funds right now, venture debt funds, with a focus on Central Eastern Europe. So we were the very first one to the market, and like it was a very interesting period of time in which you can launch a new product on this market. So on one hand, of course, the market matured, as we already discussed. On the other hand, it was a year with COVID. It was a year with a war next to Polish border and like CEE border, basically. So it was an exciting time to launch a new product on this market.
We're only waiting for the alien invasion. I mean, that's the last thing, and to my mind, I
wouldn't be surprised anymore.
Yeah,
so
neither would I.
Even it already started at the beginning of this year, I think, right? So.
God.
Yeah. So
Anyway, sorry. Go on.
So when it comes to VD, like I remember when I joined the company, during the first year of me working at Flashpoint, like 80% of my first calls with founders were about what is venture debt. Like
so educating people.
Exactly. So like, have you ever heard about venture debt? No, I haven't. Like the first time I hear this expression. Okay, so there we go, having our conversation right now, basically. So it was in the first year, and along with years, like it gradually like decreased. So right now, I would say like 20% of those calls are like with people who don't know what is venture debt. So like the awareness of the product in this market, in this region, has increased significantly. But like it's natural as companies are more mature, financing is larger, and like since we arrived also, and we did some education on the market in between. However, like basically why we decided to start the VD fund in 2019 is because we have felt that the market is finally like getting mature enough. So venture debt is basically a product for early stage companies, but not like super early stage companies. So we invest in post-Series A companies, and by this, like we can look at the amount of financing that the company raised. So I would say if a company raised more than 10 million, usually like it's a good threshold. But more important is the revenue side of the company. So we do not invest in pre-revenue companies, and I would say that the minimum for us is like 2 or 3 million of ARR at least. And looking at our euros, and looking at our portfolio, I would say it's even 5+, with a tendency to getting bigger and bigger. So it also happens as in the past. In Poland, like if you have a 10 million euro revenue, usually with little to no VC financing, it was the moment when you need to be profitable basically and grow organically. Right now we have more and more companies with like 10 million revenue still burning money because they have the financing, and like VD is a good solution for such companies. So assuming that like VD is not for every company, and especially like early stage company, The truth is that prior to 2019, we didn't have a lot of such companies. So like amount of Series A in Poland happening like 2020 to 2015. So I mentioned that the market has increased like 10 times. I don't have the exact numbers, but I'm sure that number of Series A transactions like increased much more than 10 times in between. So basically 2019 was, I would say, even 2020 was the first year when we felt that the market is mature enough for venture debt to happen.
And in terms of there being any examples or case study success stories that you can share with us from, obviously from Flashpoint's point of view in terms of your venture debt?
Sure. So so far at Flashpoint VD, we have invested in 8 companies, and like our biggest success, I would say, is that all of them are performing despite like investing through COVID, war, etc. So it's already a huge success, and all of these companies like were able to limit the dilution through raising additional debt. And like one of the examples is a company called Dispalix, for example, which is a Finnish company, which is working on developing the thinnest waveguides in displays in the world. And waveguide display is the thing that is being used in the VR glasses, for example.
Okay.
So basically, this is the VR display, which is replacing the glass in your glasses.
That'd be pretty cool.
Yeah. So actually, like I cannot say a lot, but I think that it might be a very popular product within the next year. So like together with one of the leading tech companies in the world, the company is developing a new product which should be launched very, very soon. And it's also interesting because it's a hardware company, and VD is a great solution for companies which are not like in the golden circle of interest for VC funds. So right now, most of the VC funds, like let's say last 5 years, like if you are a SaaS B2B company, this is great. And like in the meantime, if you are a crypto company, it was perfect. If you are an AI company today, it's also great. So there is always a category of companies which have the highest demand of funds, and like everybody wants to invest in them. But like hardware companies are a little bit out of the radar, and you can still build great businesses. And VD is also a nice tool for building such a story. And when it comes to Poland itself, we have invested in a company called Omnipack, which is a third-party fulfillment center, which is a category that exploded in the US, like North America especially. So basically, if you are e-commerce and like if you are e-commerce, you have like a very complicated operations ultimately, because you need to take care of logistics, take care of your warehouse, but also take care of production of your products, take care of marketing, take care of customer support. So there is like a lot of different things that you need to do. And usually like e-commerce are small businesses. They do not hire like a tremendous amount of people. So fulfillment center is an effective solution for them to get rid of the logistic warehouse part of their business and outsource it to the company that is specialized in it. And again, this is a logistic company, like it's not a SaaS B2B. So VD was a perfect solution for them to still sustain a very high growth that they have delivered in the past, and they are still delivering, without diluting themselves, especially because you are not like in a hot space, also the valuations are not as high as possible. So like with lower valuations, the dilution also comes in mind. And yeah, so this was about like say Flashpoint investments, but like we will be doing much more. And actually in Poland, the first company that raised venture debt was a company called Dog Planner, which is basically, I would say, the first VC-backed unicorn coming out of Poland. Like one of the first. It depends on the definition and when would you assume they have become a unicorn. So basically, the first success story coming out of Poland is also a company that achieved it through venture debt and like limiting the dilution at some point of time.
And in terms of Flashpoint in general, because obviously you do also equity, can you tell our viewers a bit more about your general strategy, aside from the fact that obviously your founders, as you mentioned, they come from Hungary and Ukraine, and they have essentially CE in their DNA, but obviously focus on Central and Eastern Europe. But aside from that, if in terms of any particular sectors perhaps, or anything in the sort of kind of bracket of investments, can you tell us a bit more about what you guys are interested in?
Of course, although it varies from fund to fund. So like starting from our equity fund, our focus is purely on B2B businesses. So we believe that like companies coming out of CEE are able to deliver great solution for businesses. And of course, like B2C market is also possible to like conquer. However, it's much more difficult, and also it's much more expensive. So B2B is of our focus, and we do have a large exposure to the OTA sector, like the travel sector, I would say. We have several companies operating in tourist, which, despite like COVID happening, all the lockdowns.
I was going to say, how did they?
How
did they do?
So surprisingly good. So it was also like both a perfect proof that, first of all, as I said, companies from region are flexible and they are able to succeed through the hard times. And then it's general proof that the tech sector is very resilient. So basically the tech is the solution for you, for all the businesses around the world, to increase your efficiency and effectiveness. And even if your business is struggling because of the lockdown, still you need to use some tool which makes you struggling a little bit less. So so out of this sector, like one of our best investments is a company called Guesty, which is growing basically on the wave of all the like Airbnb and Booking.com growth. So it's a software which is a tool for like small and medium landlords who have their like real estate put on marketplaces online. And this is a tool that helps them to manage all the calendars, all the customer support, and also all the pricing bids, etc. So we have a high exposure into this sector. Also, we invested in a company called Hotel Mice, like slightly another angle, and this is actually venture debt investment. We have invested in a company called Welcome Pickups, which is like an Uber-like application for picking you up from the airport. So actually, it was one of my dreams to come to the airport and for somebody waiting for me.
Yes, like in the movies, right?
Exactly. So if anybody else is like dreaming about it as well, so you can use Welcome Pickups. So it's a great tool, and it's a great company whose revenue basically went down to zero in 2020. And now the company is still out there, and it's doing like very, very well. And yeah, another proof that CEE founders, or like Southern Europe founders, because the company is a Greek one, are super flexible and resilient.
Do you mind just saying again what the name of this company was? Because I'm going on holidays soon now, and I fancy kind of surprising my fiancée on the airport, so it will be quite a great deal.
So Welcome Pickups is the name. I need to get some commission, I guess.
Credit when due, obviously. I suppose in terms of Poland specifically, any specific examples in terms of maybe not unicorns, but recent success stories from this country specifically?
You mean like at Flashpoint, or? Yeah, so at Flashpoint we have invested like the Omnipack that I already mentioned. So it is our investment from like early to like late 2021. And also around the same time we have invested in a company called Telemedico from our equity fund. And like as you can say out of the name, so this is the telemedicine company which was also doing fantastically during the COVID. However, that's another example of a company that is super capital efficient. And right now we are working on international expansion together with the company. So I would say it's like one of the leaders on the market in Poland, which is still like the 5th or 6th biggest economy in Europe. And right now we are working on expanding its services to other countries. So also I would say that, let's say, health tech sector is something of our particular interest, especially in equity fund.
I mean, these are all very sort of forward-looking future, sectors which have very bright future ahead of them, especially with all the technology coming into play, kind of rekindling everything, from healthcare to travel, and renting properties.
Yeah. When it comes to like health tech, especially in Central Eastern Europe, I was very surprised because I was looking into the space recently. And let's say, out of a consumer point of view, you have a lot of companies that will help you to improve your health, track all the metrics that you can within your body, etc. But ultimately, let's say, like the public health service is like, it's not even in 1990s, it's like in 1950s. It all works in the same way, and like there is a huge opportunity
to revolutionize it,
exactly, to expand into this territory. It's very difficult, but like it has to happen sooner or later. As I said previously, so tech is the tool for you to improve your efficiency when it comes to your daily operations. And with like people getting older, less amount of people working in hospitals, basically it's impossible to provide a supply for this demand. So
yeah. I suppose we will have to rely to a greater and greater extent on, maximizing the efficiency of the resources we already have available at hand. So doctors, nurses, hospital premises, etc. Maximizing what we can get out of that, but also, using and applying technology to effectively treat people in a more efficient way. So I suppose there is a lot of innovation to be made, especially since you say that there's plenty of room for that when it comes to our Polish healthcare system here.
Yeah, like, so of course I know Polish market is the closest one because of my background, but I believe it works, unfortunately, very similar across all countries basically. So yeah, it's a huge space that we are also looking actively into.
Well, then I suppose I keep my fingers crossed for you, for the new funds, and for all the cutting edge and wonderful things that you do at Flashpoint Capital. Ladies and gentlemen, thank you so much for joining us today. I'm Dawid Malinowski, and my guest today was Michał Papuga from from Flashpoint Capital. Thank you so much, and see you next week.
Thank you, it was a pleasure.